Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 10th. Great to be with you guys this morning. Hey, Jay, Pete, Ted. So, interesting price action, and we're seeing a nice inflection in DXY. I say it with a smile on my face because this has been highly debated here on what we do around this inflection zone. Not out of the woods yet. We're just seeing the initial rebound off of key long-term support. So we'll hit DXY, Euro, Sterling, Dollar CAD. We'll run through Peso, SPX, and Gold from Sunday's update, and then Aussie, Dollar, Yen, and we'll round it out with Kiwi. We have the RBNZ interest rate decision on tap tonight. No change expected at hold 0.25%, but nonetheless, that is coming into some slope resistance. As always, any other questions or trade setups, feel free. Hey, March and AP, Jay, great to see you guys. Let's jump right in. So before we do last night's update, I just want to go over the DXY level. So the last DXY update was actually last week. Here's where we were trading. The basics, or the main focus has been and remains this critical support zone. 2018 objective yearly open, 2016 low, 91.92, 92.28 is the zone we've talked about. Caught the lows back here in August, September. Here's the decline last week, closed right there. Here's what we're doing so far this week. All right, so we're up about 0.6% right off that mark. Looking for a reaction. That's the key inflection. Anything sub 91.92, in my humble opinion, is grave danger for the dollar. Okay, if you're looking for a major inflection. That being said, you posted an outside weekly reversal. I talked about this in the webinar yesterday, so I don't want to go over all the outside weekly reversals, but we made a lot of them last week. So typically, a reversal pattern, but nonetheless, at the lows, at trend, could be an exhaustion. We'll have to see. So initially, again, let's just go into the live charts at this point. Here's the daily. Okay. Possible slope in play. We added this one again yesterday. I'm not sure if it's in play or not, but this is the pitchfork off the high, low, high that we made for August and September. Puts you right at the median line. Now, talking about outside reversals, we've been talking about weekly, or yesterday and today, we've been talking about the weekly outside reversals that we made last week. Here's an outside day reversal right off the lows. We made it right off of key support, right off of downslope support. And here's the pump. So just an exhaustion pump and then you fail here and move lower, or is this the start of a more important basing, right? Here's the intraday chart. So weekly open happened. Obviously, we got that vaccine news, really primed markets up. Here's the pump higher. Remember, I've been getting some questions asking, well, what does, vaccine news or markets rallying, why would that be necessarily positive for the dollar? We have to remember that most of the pressure that we've been seeing from a fundamental side on the dollar has been under expectations that we're going to continue to see more lax monetary policy, lower rates. Obviously, treasuries have kind of tanked, right, on the rate side, so the yield isn't there. And with more on the way, you start to get that move lower in the dollar. If a vaccine is on the way, if we're on the cusp of quote unquote normalcy, right, from an economic standpoint, as far as goods and services and consumer spending, you could make the argument that we may need less monetary support, or maybe even not as big of a fiscal policy or a fiscal aid package as we're expecting. So all things that are kind of alleviating, right, some of that pressure that we've been seeing on the dollar. But like I said, we are not out of the woods yet, nowhere near it. First level is 92.96, a basic 38.2 of the drop. That's the monthly range right there. Then 93.09. Okay, that would at least be a near-term breakout of downtrend resistance, that 75% parallel. So would put things encouraging, right? Still have a lot of room to go. November open is bearish invalidation for the broader decline. That's right there at 93.88. And that's what would shift the focus back to the long side. So not out of the woods yet. Cautiously still thinking for a basing dollar here. If we get any pullbacks, I want to see support into 92.50. okay? Anything below the weekly open on DXY puts you right back on the resumptive pattern. And again, it's risky. It's risky onto 91.90 and below. Questions? That's a quick update on just the DXY, right? Some contrasting signals here with the weekly outside reversal lower into major support, and then the outside day reversal yesterday, giving room for some pause here. Where does that put us on euro dollar? Well, here's euro. So from a weekly standpoint, euro essentially failed a breakout of key resistance that we've been watching at 1823, 1835. It's the high week reversal close. It's the 618 retracement, a decline off the highs they made back in 2018, right? Got a couple of hairy breaks. We've been talking about this level for a while. We were watching this slope for a while, right? We had 1, 2 weekly holds, then last week broke. What was that? It's just a false break? What's going on? Well, again, the divergence we've been marking into that high. Remember, I tell you, these divergent signals are typically the closer they are to 50, the better they are. So if you look at just the highs they made back in the October run and then into the close of the month, again, bring this into a line chart, easiest way to see it. One higher high, higher high. So 3 signals on the higher highs, 3 signals on the lower highs, all below or all close to 50, below 70. Pretty decent exhaustion signal, actually, from a momentum standpoint. Now, this is the weekly chart. Nothing matters until we get the weekly peg. I completely get that. But evidence, right? Some evidence to help support the thesis that we could be sort of at an exhaustion pump here. Again, another trade that made an outside weekly reversal to fresh highs, fresh weekly highs, but nonetheless, looks a little tired. Here's euro on the daily chart. So this is a pitchfork that we've been following for some time. Here's what it looked like yesterday again. And the 618, 1859 was level that we were looking at. 618 to drop off the yearly high. You had slope resistance there. Again, last week on Friday, it looks like we closed above. Here's Monday with an outside day reversal off of highs, off of uptrend resistance. Takes you back lower. Okay, to me, that's near-term exhaustion. So again, you don't want to just jump to a short from here, but if you're not already short, we've actually peeled off a little bit already. But if you are looking, it's below 1859 is kind of still my play. It's the high day close from last month. It's going to be the 618 to drop from the yearly high still. It's slope resistance still. Momentum, ripe hold at 60. I mean, look at that. Why does that matter? Quick recap. In strong downtrends, you want to see momentum hold 60 resistance. In strong uptrends, as you did all throughout the rally from the yearly lows, you want to see support at 40. Okay, once that dynamic breaks, you get a break below 40, you look for resistance at 60. Well, we've gotten it for the last 4 attempts, or the last 3 attempts. All things to pay attention to, okay? Here's what euro looks like on the intraday. And the initial touch looks good. The move looks good. It happened on outside day reversal looks good. 1911 into 1926. That was the level we were looking for. Again, remember, you can always click on the previous charts, guys. Going to give you the update from the last most recent move. So here's the reversal right off of resistance. Again, 1911, 1926. We peaked right in the middle of that, like 1920. All right. And then here's the reversal. Near-term support, 1791. We're checking that now, okay? Want to see resistance at 1859, like I said. I've capped or I've dropped bearish inval to the weekly open, right? So if we get back through like 1890, forget it. I don't even want to test 1900. We're probably going to get ripped right through. But on the initial stunt here, 1859 initial resistance, bearish inval 1889. Next downside target. Look, there's a 50. I don't really like chasing 50s because a lot of times, more often than not, just my humble opinion, I end up peeling off some at 50 and then it just bails right through. Not a true fib, but a lot of times, very often, you'll see markets pair half the move. So just something here, if you're a real near-term guy and you're kind of been peeling some off on the way down, 1760s, 1761, a soft target, but really it's 1723. It's the bigger one. It's the 618 of the year of the monthly range. It's the 618 of the near-term advance. Slope support for this pitchfork off the lows from last month and this month, 25% parallels right there, heading into tomorrow, Thursday. All right, so Euro looks primed. Euro looks primed. Again, I wouldn't want to test anything fresh exposure on the short side from here. You know where to look on the rebound if you get it. 1791 near-term support break lower, soft target at 1760, but let's look for that 1720 on the initial thrust. Excuse me. Questions on euro dollar? All right. Number 3, sterling is at a critical resistance level. Now, we did get some sterling data today. Employment numbers came out really bad. They were wretched, like 164, a loss of 164,000. They were expecting a loss of 148,000, a little bit less than, more rather than expected. But the previous print was a negative 153 print, so not the rosiest picture on the employment front. Obviously, more lockdowns to come and the like. Sterling bucked the trend though. Despite the fact that you've seen euro weakness and dollar strength across the board, sterling still continued to press higher into a critical resistance zone. Here's what sterling looked like last night. All right. This is objective yearly open resistance at 32.50. Just higher, you got 33.11. Okay, that's the 100% longer term extension I'll show you in a moment. But a region of which we're really cautious for possible topside exhaustion. Here's sterling on the weekly. All right. So again, yearly open resistance. The 618 retracement of the entire decline off of the 2018 highs comes in right here. And again, the bottom of that range, 31.75, we started talking about that yesterday, is the 618 decline of the decline off of this year's high. So even if that's a moot point now, okay, because we've kind of pushed through it, we're still right here. On a weekly close basis, this needs to break to keep the upside in play. Note that the entire time we're doing this, momentum's really struggling. It's not a really 60 hold. We peaked through 60 earlier on this probe back in August, but long story short, just seems vulnerable. And with the disparity that you're seeing on the other dollar crosses, I don't want to be looking flat-footed here trying to catch it sterling long from these levels. Bad idea, in my humble opinion. Here's sterling on the daily chart. Looks like it might turn right here, actually. This is a good spot. So look, it's the 2000, again, there's that 618 confluence. There's the 2020 open. Just higher is slope resistance, which is why I'm kind of a little bit cautious because it could get that tag of 33 before turning around. That said, if I take a parallel, remember these slopes, again, we're a little bit more finessed with sterling, but if I were to take this parallel and kind of tweak it to the low here and the high here, we're basically there right now, right? Here's what I was working with. But if we alter it just a bit, you know what I mean? And that's the problem with, being a little bit too lenient with, not objective as far as trying to get your reference points on the pitchfork. But what we're working with is slope. I digress. Let me show you something a lot different. I could do this just as easy like this. Basic slope support, basic slope resistance. A parallel off that same gradient gives you the same slope anyway. So I'm always reluctant to, play with the reference points on your pitchforks and kind of mold it to what you're thinking, because that's where you start to fall into the pitfall of being way too subjective. So take off the pitchforks altogether, slap on some basic slope, and let's just get some parallels in play. And lo and behold, it's the same gradient. Okay, so we're at resistance. You know what I mean? If momentum punches through here and you get a daily close above this region, okay, on the daily chart, we have 33, or on the intraday, we have 33.11 is the upper end on that. I'll show you in a moment, which is 100 longer term. But if we do get that extension, it's a straight breakout. And what do we always say? A breach of uptrend resistance can oftentimes be the strongest part of the move. So I'm not ruling that out. I just don't think that's the play for us here with what's happening broadly on the dollar side. So look, here's the intraday chart. Again, really clean move right against that level so far. You know, we still could get that one push into 33.11. I forget where that 100 is off of. I believe it's off the lows. Right. Okay, so it's off the lows of the year. March, April, May swing was the 100% was 33.11. Nice pivot and point. Nice pivot point rather. You saw a nice rebound there, break, test of support, inflection on both sides here. So I have it on the chart just for reference, right? But let's see how this pans out. The only thing we got to adjust here, guys, is the new retracement that we added last night. Again, we don't know if this is the high, so if it probes into a new high, we're gonna have to move that, but it will just bring up your choke points a little bit here. 38.2 matches up with the weekly opening range lows. You know, that's where your 50 would be right here, around 30.50. But you get the picture. Looking for topside exhaustion in sterling while below 33. Questions? One thing I do want to check out, just bear with me one sec, guys. I want to see what this looks like. All right, that's not gonna help. All right. Okay, so that's number 3. I'll pick up the pace a little bit. Those are kind of the focuses. Number 4, I just wanted to talk about dollar CAD. It's a gutsy move, and I recognize that, but I think it's a good long. Let me take a step back. Here's dollar CAD on the weekly charts, and here's my issue. Like, what the heck is that? It looks like we just probed the yearly low at 29.51, and then we kind of just rebounded. Last week, unlike some of the other dollar crosses, you didn't get the outside weekly reversal in dollar CAD. The high never maxed out while we did close lower. But again, momentum. Like, what's this? What? If we're going to break to fresh yearly lows, I would not want to see 40 holding support. So just a reference, right? The weekly chart's not really saying much. You're at the bottom end of the yearly range. That's all you got to say here. Daily chart looks like this. Right? Again, the yearly open, the objective yearly open is 29.75. Here's a near-term slope I just threw on here this morning, right off the highs, gives you lower parallel support. Could be a decent rebound. Look, it was a gutsy trade. Again, stops at break even at this point and try to see if you can get a thrust through 30.50. But man, here's the near-term chart. And here's what I showed you guys last night. All right. So this pitchfork off the highs. Here's the lower parallel. Here's the yearly open. So yesterday was the first test of yearly open support, right? What happened? We dipped below intraday, tagged the parallel, then closed the day above the September low, the 2020 open, 29.75, 29.94. So that to me is a test and a fail, right? Because we need to materially see that daily close below on base just to get the validation of the break. Well, you didn't get it. So inherently, you're looking for the recovery. Now look, 30.70, 30.37, that's the objective weekly open. We noted that last night. We're there now. The 618's at 30.56. This is of the longer term drop of the ascent, not the drop. So, you know, just a pivot point I'm looking for. A basic 38.2 of the drop gives you 31. So from a risk reward standpoint, you know, it's pretty it's pretty tight. But I just love the spot so much. And if you're going to get dollar strength, why not on, you know, the test of the yearly low? So let's see what happens. The one thing I would want to bring up here that's super interesting, I was kind of looking at ahead of the open, is that the weekly opening range is literally right here. This is the weekly opening range high. Although it's only Tuesday. Yesterday's highs basically is right here. You got 30.56, that's 618. You got Friday's high right here. So let's just call it 3060. You know, if we see strength through 3060 right on, is another 40 pip run on to that 31 handle, 38.2 retracement, just higher as that confluence resistance zone near 3120. Now you try to give color to the ascent, right? You want to give yourself sort of an upslope or something to look for as far as just a gradient. There's nothing here yet. There's nothing here yet. Even something like this does no good. So we need to see a break of resistance here if this is going to hold. If it's going to suggest that this was any somewhat important near-term low in price. All right, weakness from the downside again. From here, it's Toronto is a big long way down. Think like 28.84 is a soft target. Your first major level comes down at 27.78. Big stuff here, guys. Big stuff at the early lows for dollar CAD. All right, that's number 4. Number 5, real quick, peso. Peso price action dropping right into support as well. We wanted to highlight that level for you guys as quickly as possible as we got there. Here's what peso looked like as we started off the week, or this was back on the 8th. Into the open of Sunday, some levels of interest that we were looking at. The 2019 high, 2025.61. The 786 retracement, 2007.52. The lower parallel just lower. So we noted that this was a major break, right? We had broken the September lows, we had broken the October lows, we had broken, numerous attempts of this region, tested as resistance into the close last week. So right into the open, the inherent focus was lower. These 3 levels, looking for exhaustion off of one of these 2. What caught? Right in between, just below that 786. We're seeing a little bit of a rebound now. Here's what the intraday chart looks like. Oops. All right, so there's the open, there's the break, 2025, 61. There's the 786 retracement. Nice hold there, nice rebound. Again, this is one of those trades where if you're gonna be in a counter trend, if you're trying to do a synthetic hedge, this is the one where if dollar maxes out or you see a decent dollar recovery, the tell I think is you're gonna be up here, right? Former swing lows, that same level we just talked about is the break that charged this whole move, is now converging on the median line all the way into the end of the week, right? So a level of which if we see some recovery, I'd be looking. I'm not holding any longs on this, but again, if we do get the recovery, that's kind of the focus. Weakness beyond here, I don't even have an intraday target below that parallel. There's a long way down to 1935 essentially, which is going to be an 88.6 of the yearly range. Could see a soft target. Let me highlight that high there. This could be a soft target. But you get the picture. So a little bit of a bounce here in dollar peso, further reflecting some of that dollar blow off that we're getting. Here's SPX. And this one was uncanny. I hope some of you are following this. It's insane. Here's what we looked at in the webinar yesterday. Basic slope. If we just took trend line resistance off the yearly highs, I just told you tack on a chart of SPX and take the highs and connect them this year. Here's the first high. Here's the second high. 2 points is speculative. There's the third one. So if this multi-month consolidation pattern was legit, well, the acceleration, we got it. Boy, did it fail right there at that slope. Here's the pullback. So what does that mean? Well, here's the intraday chart. And again, just before real quick, here's the weekly on SPX, again, in log scale. Look at that. Look where we failed. Look at the gradient. It's the same gradient from 2009 low. Okay, so weekly chart, daily chart said this. Here was the intraday. And here's what the intraday chart looked like back on into the open of the week. So the levels that we had stacked up were into that 2618. That's the last one I gave you at 3602. Yesterday in the webinar, we had highlighted, well, listen, if we take a real near-term look at this advance just off the lows from October, right, that first leg up, the 1618's at 3661, stop traffic, that converges on that red line we just saw in the daily chart, right? Well, here's the slope we've been tacking, simple high, low, high, or low, high, low, topside breach, boom, quick tag of that 1618. Look where we are at now. Okay, so we're at support. This is a slope off the September and October high, right? So it's the consolidation breakout support, right? This consolidation that we were looking at. Here's the red line. We broke through it, accelerated, and we're right back there as support. Watch for a reaction here. A pivot below yesterday's low, in my humble opinion, puts us right back in this zone. And that's why I think we're at such a pivotal stage, because these stretches went some key areas. They marked some reversals all over the place, right? And here's the pullback. This is where you got to gauge, was a more important high registered, or is this just an exhaustion? And let's resume. This is where I'm looking today. Weakness below that low really puts us in a little bit more of a down spout here near term for SPX. Not the most popular call, but that's where we're at, guys. That's where we're at. Now, a quick update on this. Now that we've made this sort of stretch, the 618 null and void, that high has been taken out. New retracement for the near-term advance off the monthly lows. Gives you a basic 38.2 right there at 35.06. So a little bit lower than the low we just made there. But a good reference point, a good starting point where if we do break, yeah, probably gonna get a bigger pullback. And again, it's counterintuitive. Everyone's probably asking, well, why? We just got a vaccine and yada, yada, yada. The markets have been primed, guys. We've been in a raging rally. Like, good news will only put so much more juice in the engine after you've already, put nitrous in it. So there's gonna be give and take. If this support holds right now, sure, right back into 36, but I'd still be concerned. All right, so that's SPX. Okay, gold, number 7. Here's where gold's trading. Massive move. I don't want to encourage much action on this at all, to be quite frank with all of you. Here's the gold sort of near-term spot trade that we were looking at. What can I say about this? It was just too clean, but with the same respect, it's too severe to try to chase or play right now. Here was the setup. Here's what we looked at in the start of the week, and here's where we are now. We talked about 1961. That was big resistance, was multiple upslope resistance for the pitchfork, for the near-term trend, and you had divergence into that high. So all accounts, we were looking for sort of a near-term pullback. Now, for me, 1900 was it. If we got 1900, I was actually looking for a decent hold here, because that would validate a break of slope resistance, turn support. It would keep you in the confines of the ascent, and it's a nice 50, right? Half the move. Well, we crashed through it. The whole thing crashed. As soon as vaccine news came out and all that good stuff crashed. Again, a discount of more stimulus, right? Which is kind of the biggest threat that you see to currencies and fiat currencies in general, why people want to hedge with gold against inflationary measures and all this printing. That and again, like I said earlier in the webinar, the return to normalcy. So is the vaccine going to kind of quell all these concerns? That again would be risk positive. So every way you slice it, it was kind of a recipe for a beautiful sell-off. So while we were just looking for 19, we got well deeper below that. I don't have sort of a clean, viable setup from here for you guys. So I'm just going to put it together right with you as we go. Sort of leave that on there. Bearish inval. Yeah. I mean, there's really not much. We just need to correct this retracement. There's really not much you want to get too intricate with here, okay? I would leave, I mean, I just talked about the 50 and all my feelings on that, but um, watch for resistance there, ahead of there, ideally ahead of 1908. Still looking for 1836. Here's the weekly chart for gold. 1836, that's where we were looking for in the initial drop back here in September. We never got it. It's a basic 38.2 of the yearly range. Still a level of interest. And as you can see, for gold, a wicked move. On a weekly standpoint, we've already matched and beat last week by making an outside weekly reversal on a false break scenario. I think you continue to look lower. All right, that's number 7. Number 8, real quick, here's Aussie at resistance, big resistance. On the weekly charts, it's a little bit different of a picture. All right, because you have that pivot back above the 7016, 7042 level, and that's really what we've been talking about for a while, is an outside week reversal off that level. Beautiful. But what did we say yesterday? That outside reversal took you where? Right into key resistance. Right into key resistance. Last year's high, the May 2017 low. Nice pivot in price, slope resistance. Right? Here's the first touch. Looks pretty clean. Daily chart looks like this. Real simple here. Obviously, the 618, 7252 didn't really get the efficacy that you wanted, so I'm not really going to stress that at this point. But if we just keep things on an even keel and look at this more objectively, basic slope support, broken, resistance, resistance. We just checked it as resistance again. Now, ideally, right, we get some sort of near-term formation to the downslope that gives us some more conviction. Just want to show you this. We have no way of knowing, or operating under the assumption that this is a major high. But you get the picture. I'm looking for downslope if this is going to hold here. Major, why not, right? Major critical resistance, key inflection in price. Here's what it looks like on the intraday. And here's the initial touch. Okay, looks good. Here's what Aussie looked like on our last update. Here was the zone. Here's the zone. So if we get that move and buckle back below 72.56, I do like a larger pullback. You're in, the upslope here. Like I said, we have no gradient to the downside yet, but watch that slope. So determinant on time, it's basically 72 right now, but it depends how far out it takes. That's going to be the break that at least shifts you towards a focus towards the lower parallel. But what a beautiful spot, right? If you caught that yesterday, or even if you got in late with a stop against the high, you're banking on a break below here. This is your Friday close. This is slope support. Look for a break below 72.50. All right. Now, one of my favorite moves here, okay, one of my favorite setups. Dollar yen is something that is completely, this is why we've called this and dubbed this the abomination after so many years. It's because of moves like this. So on the weekly chart, dollar yen looks like this. The major zone of support we talked about for months was 104.12. One touch, two touch. Friday of last week looked like it was just a complete massacre. Look at this thing now. Look at this thing now. Disgusting, right? Here's what it looks like on the daily chart. This is just from the yearly open. Here's your yearly open. Man, oh man. There's 104.12. Third touch, break, accelerated move to the downside. 3 days, 2 days down there, then rip right through, taking out not only this month's range highs, but also going right into downslopes of resistance. So you're screwed either way. So You know, the long side's at topside resistance. You just came off of downslope support. This thing is treacherous, guys. I bring it up just because, you know, it's something that we've been tracking. And certainly, I can't even remember the last update. Here was the last update as we were breaking that key support. And I was highlighting to you guys, watch that next level. It's going to be 103.43, beautiful level, 786 retracement. Once that holds, if you get a recovery, look for exhaustion back here. It's not what happened. You got to drill into this. You got even deeper, and then it just ripped everyone's face off. So if we're to work with this formation, well, let me just get rid of this pitchfork. I was throwing this on to kind of get some cover on this. If we're working under the assumption that this is a simple break of downtrend resistance, then something like this would make sense off the low, high, low. Highlights resistance once again at 105.90 into 106.09. Highlights key support once again, 25% parallel converges right now on that key 104.12 level. So those are the only levels I'll throw out there today. I'm not involved here. I kind of terrified of this thing, that move. So a pistol to my head, you see a downside move back towards 104.50s or so. Look for the playoff there. But at the end of the day, we need that breach above 106 to at least validate that we put in a more significant low and we're on the way higher. It's the abomination for you. Okay, that's number 10. Last but not least, RBNZ is on tap tonight. Again, expected hold at 0.25%. Kiwi's coming into some slope resistance. Lateral levels for me don't really do it on this one, but here's what it looks like on the weekly, and here's my broader problem with the premise of trying to fade this pair. It's basically a breakaway gap, guys, above a major resistance zone. Here's yearly open resistance for this year. Here's the 618 retracement and decline off the highs they made in 2017. Here's basic slope resistance off that high as well. So if this is a breakout, you know, trying to fight this on the short side here seems suicidal. If it's a fake out, this might be an awesome entry. I just don't have enough conviction. Now, you might be looking to yourself and saying, Mike, is there some crazy divergence on the weekly chart? There is, right? All three of these last highs, higher high, higher high, higher high, all three of them, lower high, lower high. So yeah, there's divergence, but is that enough to trigger a position or take a counter trend trade? Not in my opinion. Here's Kiwi on the daily chart. So basic slope for the ascent off the lows. If you take parallel off this trend support, right? So was that just a test? Again, speculative. Take a hunch. Am I going to put my money behind it? Nah, not yet. I feel like I'm going to miss this one. I feel like it's going to be a fake out and it's going to pull back and we're going to miss it. But I'd rather miss it on a non-conviction move than jump into a non-conviction move and kind of cross my fingers with hopium. Hope is not a strategy, remember. Here's what it looks like on the intraday. Even more convincing here, in my opinion. Just looks tired. Just looks tired. But again, I don't have lateral levels up here. If I did, I'd be more comfortable trying to fade that move, trying to fight that move. But I don't. So I wait. I wait. You know, nothing. Nothing. So the high day close I have at 68.89. I think that's a ways away. High day close from a couple of years ago. What is that? Let me get the actual thing. 2019 high day close. Last year's high day close gives you 68.89. You know what I'm saying? The slope comes in just ahead of that. So if we were to get a RBNZ run right to the upside, great level to look for possible exhaustion. But with that major event risk on tap and everything that's going on with the dollar, U.S. election still up in the air and the likes, I'm not going to try to fight this from here. If that is a weekly breakout of multi-year downtrend resistance, we're just on the cusp. I don't want to be trying to fight that yet. So one of those trades where put on the shelf, but track it closely because we are coming into interest rate decision and we are tempting a pretty major breakout. Okay, that's everything on my end. If you have any other questions, feel free to throw them on the message board. If not, we'll go ahead and wrap it up here. I will see you guys on Thursday. Keep in mind, again, it's light on data, but we do get some ancillary prints. So you get some the GDP that we already got numbers out of UK this morning with those employment prints, but we do have GDP numbers coming out tomorrow as well from the UK and core inflation from the US. So keep your eyes on both of those. Thursday gets you GDP out of the Eurozone. So we'll keep an eye on that as well. Or is that Friday rather? Excuse me. Marchin, Kiwi CAD. Quick look at Kiwi CAD for you. Testing the top end of that consolidation. Forget this thing. So it's testing a break of that consolidation zone now. But the lateral level is coming into a focus. So look, I have 89 as that 8906 is that 100% extension. It's an older dated one, so I don't want to stress it. You know what I mean? It's like off the lows for the year, so off the ascent. But you've been getting some major closes in there, which is why I think I left it on here, right? So if you bring it to a line chart, really straddle. Here's a point reference touch, just nice, right? So the breakout of that downtrend we were following, man, it's messy. It's an ugly trade. Here's the probe. Hmm. Bear with me. I just want to see what this looks like. It's not the cleanest. I'd be looking lower. I'd be looking lower near term. First, I'd be looking lower. Friday's low is the first level I'd be looking for. That's 88.23. I'd need a break below 88 to validate a reversal in near-term trend towards 87.36. A breach from here, man, you have to go back to the weekly levels here and basically look for a stretch back into the high day close is actually down here because it was an outside day reversal. So you're actually looking for the close highs. Again, that's just basically 90, the highs for the year. All right, so Marchin, that's kind of what I'd be looking at there on Kiwi CAD. Aussie Kiwi. Don't like it. Don't like it. If you put a pistol to my head, I would tell you to buy a deeper cut while below Friday's or last month's low, but I don't like it. And I don't like it just on account of the Aussie Kiwi play in general because of my I guess lack of certainty on the Kiwi itself. And where with Aussie's trading, I would be more inclined to look lower, but if Kiwi's going to fake out, it's going to be disastrous for this pair. So same thing with Euro Key, Marchin. I'm just not a fan of Kiwi right now. So the Kiwi crosses in general. Here's Euro Key. Yeah, great. Sure, it moved lower. Kiwi strength, Euro weakness, double whammy. Break of uptrend support. A couple of weeks. What is that? Right into the beginning of the month. Great. But where does that take you? You're right off like the yearly lows, former slope resistance, turn support. I don't want to mess with any Kiwi crosses right now. Not a big fan. Not a big fan. Definitely a break of uptrend support, right? And that's identified. But trying to tackle it on the way down. Choo, and you're at the 100. Chill with this one. Don't mess with it. Don't mess with it. Ew. Dude, this is pretty sweet actually. Look for inflection right there. Literally right there. All right, this is the daily chart, so the daily close is going to matter here, but that's the break that you need to get the move. Was short Kiwi CAD, but I got scared and went out. I don't blame you. I don't blame you with the Kiwi right now. Yo, and you have the RBNZ on tap, Marchin. Play it straight. And Euro Kiwi. It's 786 fib. What is this? Is where's the yearly open? Here's your yearly open. So I hate using these highs, but I think you're probably thinking of the 78 fib of this move, right? No, not even. 88.6. Oh, the 2017 move. Sure, longer term. Yeah. All right. So look, I like this. I'm going to track this one for the next couple of days just because, let me write this down. That's a really sweet spot. I love those convergence patterns on the downside, Euro, New Zealand. Okay. Thanks for bringing that up. Marcin, guys, have a great day trading. Best of luck, and I will see you all on Thursday. Cheers.